In the previous video, we had allowed for 1,000 of receivables to be uncollectible. Well, that balance gets carried forward into the next accounting period. We're now into year 2. So we have our beginning receivable balance, that was our ending balance from last year, and our ending balance in our allowance of 1,000. Our uncollectible accounts expense from last year got closed into retained earnings. So in year 2, you have new sales on account. That'll make this account go up, and then you collect a bunch of them, making it go down. Well, what I want to focus on is not the amount that receivables increased and decreased by. I want to talk about how you write off a specific account. So in this $10,000 of receivables was a sale you made to Lynch last year. Lynch has gone bankrupt, so what you're now having to do is actually write off that account. So to write off an account receivable, a specific account receivable, you're going to credit Lynch receivable. See, that way it'll get them out of your receivable account, and we can now credit that account because we have a name. Now the corresponding debit is not to an expense, and the reason we don't debit the expense is actually last year in year 1 you had already expensed and allowed for Lynch to go bad. So the other side to this entry is you're going to debit your allowance account. The effect of that is that you're going to empty, if you will, the bucket that you had used. In other words, you're making this less of a negative balance. So now we have 200 left in there. Now the effect of the write-off, take note here that we're basically increasing and decreasing what is in effect the same account. These go hand in hand on the balance sheet. So when you increase and decrease these accounts, they offset each other. So there's actually no effect on the receivables. So in other words, your net receivable is the same before a write-off as it is after a write-off. Now what you can see here is that we have 200 left. If we're done writing off all of year 1 sales, receivables, we have 200 that we had in a sense over allowed for, and we'll talk about what you do when you make your adjusting entry for the next accounting period given you have 200 left in that account from the prior period.